All right. Good morning, everybody. Good evening. Good afternoon. How's everyone doing? All right. I hope you guys can hear me and see me just fine. All right. Welcome to a public webinar with FXStreet. My name is Navin Prithyani from urbanforex.com. I'm the senior trader there, the CEO of Black Tower Investments in Hong Kong, and also Anticipate Don't Participate DMCC in Dubai. Been with FXStreet for, I would say, over 5 years now, doing these webinars with them, public webinars, private webinars, and I hope if you haven't gotten a chance to experience some of their premium webinars, that's something that you guys can look into. But for today's webinar, uh, we we want to go over some of the tools and techniques on what you need to do to become a better trader, especially when it comes to dealing with support and resistance. Okay? Yeah, everyone can hear me and see me just fine? Okay, just give me a second here. Let me just get things set up so I can turn on my screen sharing for you here. Okay. All right, I'm gonna also show you a trade that we are watching at the firm. So that's something I can explain. You can follow along as well. One moment, and I'll start the screen sharing. Okay. Okay. All right, so the screen should be visible now. You guys should be able to see my screen. Let me also, let me also bring in the chat here. If you guys can, when it comes to the chat, if you guys can use the chat area, not the Q&A area, so then we can all see the messages in case you have one, and then we will begin. So, hi David, welcome. Okay, we're getting confirmation that the screen is okay. All right, let's begin. Let's begin. So first things first. What we're basically going to be talking about is what makes support and resistance work. What is it about support and resistance? Okay, this is a very important thing to kind of understand is everyone's been doing support and resistance for some time. Everyone understands support and resistance, at least if you've been in the industry for some time. Um, there's this discussion about support and resistance as, and then you connect these lines, and then it's this zone, and then it's this area. So I've introduced support resistance zones in, I don't know, 1993, right? Like very, very long time ago. And in 2009, made my first support and resistance zone video on YouTube. But what I want to go in is even deeper because no matter what you do with any knowledge when it comes to trading, the very first thing that you have to understand is why am I doing what I am doing? Okay, why is this significant? Why do I need to know this? If I throw at you Fibonacci and then bat pattern, cat pattern, dinosaur pattern, all of these things at you, you have to have this wonderment of, okay, I'll do it, but first tell me why. Why is this important? Why does it matter? And more importantly than just thinking about why, I'm going to give you for the first 5 minutes a brief overview of something that is not talked about ever. Okay? What is our role in this industry? What is our job? What do we do? Is our job to draw the best design as much as possible and we get paid for it? Anything you've done in your life that you've gotten paid for, it was in exchange of something. Is it not correct? Whether it's an exchange for time or an exchange for a service or an exchange for a product that you might have sold. You always get paid for something in exchange that you can provide. Now think about that for a minute. In the charts, what are you providing when you draw your lines and techniques and strategies and RSIs and stochastics and supplies and demands and all this stuff? What are you providing? What is your edge? What is your added benefit? Why should you and I get paid? Okay, so that's a very important thing to think about. Just by drawing things, we don't become and we don't open the doors to get an ability to get paid heavily. Okay, so you have to understand that. What we are, okay, when it comes to trading, I'm going to draw here on my screen here. Okay, I just want to confirm, can you guys see this circle if I draw it on my screen? Okay, if you guys can just confirm that so I know, okay, you guys can see it. Yeah, perfect, perfect. So I'm going to draw over here. Now, what you are as a trader is nothing but an agent. You're nothing but an agent in the market. Now, what I mean by an agent, now think about it this way. Okay, now entertain me for 5 minutes while I explain this concept to you, okay? Because without this concept, anything and everything that is done, whether you're AI trading, your technical trading, your fundamental trading, your pulling over Warren Buffett and saying, okay, you tell me what to do next. You know, whatever the whole point is, you as a trader are an agent. Now, let me explain what that means. You're an agent. A normal person who needs the financial market is basically like a restaurant owner. Okay? It's basically like a restaurant owner. Basically what he is saying, I need milk, I need eggs because I'm a breakfast place. Okay? And for me to buy milk, for me to buy eggs, I need to go do transaction in the market, but I need prices to be stable. They need to be stable, still. They need to be calm. Okay? I don't want my eggs to go from $1 to suddenly $3,000 one piece. No. Nobody likes that. It needs to calm down. This is the true usage of the market. Now, where do we come in as traders? We don't enter yet. We are not in this day-to-day business. Because in this day-to-day business is randomness. How many of you guys in this room have heard sentences been thrown around that trading is random? It's like gambling, it's random. Have you heard that before? And the answer is yes, it is random, but not all the time. Not all the time. If you're going to approach the market in an area where it is a normal operation, you'll get stuck in the randomness. Because what you're trying to do is you want his $1 milk to go to $4. That's not going to happen. So to make his $1 milk go to $4, only then you can make money by buying low, selling high. But that's not going to happen because normal business doesn't allow that to fluctuate. So when does it fluctuate? And when do we come in as a trader? This question has been unanswered in the entire history of YouTube. It's like, because everyone is trying to become a trader without even understanding the industry. It's like, what do we do? What is our job? You know, where do we operate, right? So let's talk about this. Let's talk about this. So this is something that we're opening up for the first time for FXStreet users. So you guys are privileged to be here to hear about this firsthand from actual trading, right? So let's talk about this. Now, if you understand that's the case, the norm, okay? Now, what happens when, let's say, another restaurant owner, okay, he has a bus of tourists coming his way, okay? He has a bus of tourists coming his way. Now, suddenly, his requirement has gone from, I need 5 milk per day, I need 5 eggs per day, to suddenly, that there's a bus coming. My requirement has suddenly shot up. I need 500 milk. I need 500 eggs. So far, so good. Is everyone with me? As of right now, all we know is his normal operations went to a sudden increase in requirement. He needs now a lot more than what he normally does. Now, the market. The market says, yeah, but I only have 50. Here's one guy. Another guy says, I have 25. Another guy says, I have 12. Another guy says, I have 100. What this guy says, hey, you, give me everything. Give me everything you have. It's $1. No problem. I'll take it. Wow, that guy has a big requirement. He just bought the entire lot. The next guy says, you know what? It's $1.25. Store owner says, give it to me. I don't care. $1.25, take it, give it to me. I want all of it. That's interesting. There's a big player in the market. He needs a lot. You know what? $2.50. Store owner says, I don't care. Give it to me. I'll take it all. Huh. You know what? $3. Give it to me. I'll take it all. This goes from your normal $1 to suddenly an increase in speed. What that increase in speed is not, it's an uptrend, it's a range break, it's this, it's that. Stop labeling it. Think of the logic. What just happened is there is a player here who needs more than is available, which means one thing only. Not filled. There is a guy with a requirement that hasn't been met. Where we come in as a trader, we are an agent. We're saying, oh, I spot the demand. Hey, buddy, you need 500 pieces. I see you've bought 200. You probably need a lot more, right? What if I can get you some? We are here to help. So as traders, what we do is we find opportunities where we say, I want a decent price. I know he's going to buy more anyways. I want to see if I can buy some of that milk and eggs so I can also sell it to him at high prices, at $3.50. I made my money as a trader, as a trader. A trader means I have no interest in the product. I don't want to buy the eggs and cook with them. I don't have any interest in this. I am only interested because I see a way for me to flip money from that product. How many of you guys in this room just had an aha moment that says, my goodness, I've been in this industry for so long, nobody explains what is trading? How many of you guys just had an aha moment where it's just like, it's clicking a little bit. It's like, it's making sense. Yes, yes, let's keep going. You know, is it making sense? Oh, Zachary, you're asking, will this be recorded? Yeah, so this is recorded. Yeah, FXStreet generally does a fantastic job of getting you guys the recordings. And there's a link. There you go. Thank you. Okay, so far so good. All right, so what's basically happening, the reason why I spent this 5 minutes explaining this weird cartoon thing is to sort of tell you the market is a place for normality, okay? But when a larger player comes in and he has a huge request and the market cannot fulfill it, that's where we come in as a trader saying, let me help. Let me help you and exchange. Can you give me something? Okay, so we get paid handsomely for helping him find his orders. Does that make sense? Are you guys understanding this now? Because us as traders, whether the product is euro, whether the product is dollar, whether the product is gold, Apple stock, Baidu stock, New Zealand cows, screwdrivers, elephants, A trader is not interested in the product itself. A trader simply spots the opportunity and says, let me provide it for you for a little bit more price, and we make our money. Yes? So let's now understand this in the logic of support and resistance. Why does it work? Why do we draw them? Why is everyone so fascinated with support and resistance? What is the core principle of support and resistance? How does it move? Why does it move? And if I draw it, is there a way for me to check, did I draw it correctly? Not someone telling me that, you see this? This needs to connect to this. No, not the body, the tail. No, not the tail, the whole area. What are you doing? What are you doing? It's not a drawing contest. You're trading in the market. Understand who needs what. It's not a drawing thing. You're not going to get paid money for drawing stuff. Does that make sense? Yeah. I see. I hope you guys are keeping up with my enthusiasm in trying to get this information across to you guys, right? All right, so we'll go deeper. We'll make sure today when you walk away from this FXStreet webinar, you're like, awesome, fantastic. Now I understand what is my job in the market. Where do I need to trade? I can't trade all day, every day. It's not a 24-hour market as they say. It's open 24 hours, but I am not needed 24 hours. I don't want the randomness. I want to be in an area where the randomness is not there. It is that area I want to operate. Yes? Okay, moving forward. So, support and resistance, why do they work? So let's talk about this for a moment. Okay, why they work. Now, when the prices are $1, for example, okay, and the prices have been hovering and keeping track, and then what happens, it goes from $1 to suddenly, remember that restaurant guy who needed eggs and milk, and then suddenly it's like that same product in a very short span of time became $5. Now, what this thing does is the stronger it moves, the bigger the shock value. The stronger it moves, the bigger the shock value. What that means is people look at that and say, interesting, interesting. When the prices come back down, many people say, whoa, it was at $5, I'm getting a good deal. Now it's at $3, buy it. Now it's at $2, buy it. This is what causes a fluctuation coming down. Say, whatever strong move up happens, it comes with a fluctuation because people look at this as, yeah, but this is all a discount compared to where it was, the high peak, right? It's all a discount. But as it gets closer to this level, that shockful, painful memory comes into people's minds saying, last time it was at $1, it went to $5. Make sure you buy now at $1. People are not thinking it will go below $1. They're thinking, last time, you remember that day, 2 days ago, 3 days ago, when it was $1, it became $5. Maybe today it happens again. What happens in the real estate market? You know my neighbor, he bought the house for $50,000 and it became $2 million. So when the price goes down to $50,000, you will remember and say, last time it jumped up to $2 million. I'll also buy at $50,000. The public jumps in that memory location. Does that make sense? So why we draw these areas is because it has shock value. It has memory embedded into that area. Memory of the individuals who have been hurt by saying it was at $1 and became $5. That's not good for someone who needs to operate on a day-to-day basis. So he might say, I can only run my restaurant if it's at $1. He will buy a lot out of fear, thinking It goes up to $5 again, I won't be able to run my restaurant. So he will buy a lot. People who have no business with eggs and milk, they will buy a lot thinking it's a discount. It'll go up again. Think about it this way. All the people buying Bitcoin, they buy it because it's at a discount. I'm pretty certain more than half of them, they have no idea what they're buying. They're only buying because it's cheap. They have no idea what it is, how it operates, what's the function of it, what can I buy with it, does it even move, does it make money, is it a company, is it a nothing. It's just, it was at 60,000, now it's 10,000, maybe I should buy it. It's just a game mentally about a negotiation game. It has nothing to do with the actual product itself. So the guy who has the product and needs to operate, he will buy. The guy who's simply just fluffing negotiation, he will buy, right? And this is what makes this area respond. So far, so good? Is that making sense? Is it starting to click on why support and resistance have a little bit more value? Okay, now I'm going to do the same thing now. Here's a market going up and down, and then it does this. Are these good support resistance? I can draw them. They draw nicely, right? I can draw them above this, below that. I can draw so it connects nicely. I can draw it as beautifully as possible. What's the logic? Where's the panic? Where's the shock value? Where is the thing that will make people say, do it again, buy it now, otherwise we're dead, buy it, buy it, buy it. There's nothing there. Why would it hold? So you've drawn correctly, but it won't hold. You need to understand this logic. It's the logic that makes the drawing correct or incorrect. So that same way that you draw, if you draw it there, now it's correct suddenly. The same way you draw it, but now it's correct. All the other ones were incorrect. Interesting, isn't it? So what I'm trying to explain to you is the game of support and resistance is not how do I draw them and how do I trade from them. First of all, is before we get into any of that stuff is, what is it? How does it work? Why is it there? Why do people like to use it? What is the real science behind it? Only when you understand that, suddenly your drawing gets better. Suddenly the ones that are important you draw, the ones that are not important you don't draw. And you become suddenly good at it, right? So it's not something you have to train on how to draw or how to deal with it, but it's just a logical thing that once you understand it, it just all makes sense from there on out. Yeah? Now, so if you understand our job is to be an agent, okay? We're an agent. We help those who need a large quantity of something, okay? And if they need a large quantity of something, this is generally around opening hours where it's busy. This is generally around big news events where it's busy. Now, when you're on the highway, okay, and you in the highway, do you know when it gets busy? Yeah, around 9 o'clock, around 5 o'clock, generally the times that you know is rush hour. But that same highway is open 24 hours a day. It's not like they close after 5 p.m. It's open all day long, but then it's busy at a certain moment, right? Trading is the same way. It's open 24 hours a day, but it's busy at a certain moment. Think of yourself as, I don't know, maybe it's a weird example, but think of yourself as the ambulance. Okay? You will get the most business as an ambulance during those rush hours where the accidents are higher or prone to be higher. Okay? Or you're a policeman or a firefighter, whatever the case is. you will be more active during those times because that is where you're needed the most. Okay, you're not going to be working in the middle of the night when there's like 3 cars just flying through and nothing's really happening. You see what I mean? So just because it's open 24 hours a day, it doesn't mean you have to operate 24 hours a day. We are agents. We are of service where we are needed because we don't care for the product. We're not investors. We don't buy the milk and eggs and then hold it and think one day someone will need it and they will have to come to me. That's not trading. That's investing. Does that make sense? Is it clicking? Yes? No? Yes? Is it making sense? So as an agent, if you understand this concept and you understand that, okay, well, if there is a quiet period and then markets are opening, so let's say New York opens, right? New York's opening in 1 hour. Okay, the New York Stock Exchange opens in 1 hour. NYSE. Okay, the Forex New York's been open, but the stock exchange is opening in a little bit. So let's say they open and then there's suddenly this movement. Huh. And then you see Euro USD has moved. And then you look at another one and you're like, this is pound CAD. And then pound CAD does this. Now this is where the mistakes happen, okay? They start to come down and someone will say, you see the support resistance? I'm going to trade pound CAD. Yes, that is correct to a certain theoretical logic. Yes, there is support resistance. Yes, the person is trying to trade that because it's active hours, but does he really need that many orders? If you have a lot of money in your pocket and don't you want to put it to use at the best possible spot? If you have capability to buy 20 standard lots, don't you want to know the other person needs 200 standard lots? If you have 20 that you can provide and the other person just needs 10, you're not going to make enough money. Your time and capital is not used efficiently. Go where you're needed the most. Go where you're needed the most because you can spot the demand and they're telling you, help me. I need a lot. Help me. And then you're saying, perfect. I don't have to trade the news. So let that thing go. I don't have to run after it. Okay, so I don't trade the news itself, but I'm aware a news is coming. I'm aware the market's opening, but I don't have to do it. I don't have to run after it. Let it go and be like, got it? Now, I want to see how desperate is this guy. Interesting. Okay. Wow. He really wants Euro USD. These support resistance lines, I will draw. Not because normally I will not draw them, but now in the context of why I'm drawing them, suddenly these little ones I will draw. They have use to me. Because I know this guy is really desperate to buy a lot more of Euro USD. I will be right there waiting to help him. Because I was sitting right here waiting to help him over here, thinking I would get the best price, but he never came. He's that desperate. He's that desperate. So now, as he's desperate and willing to pay higher, I'm going to have to pay a little bit higher because I need to acquire the product to sell it to him. Okay, so I need to go to the market and be like, hey man, what can you give it to me? And the person says, I have it for $5. Like, oh, come on, not $5. Can you give it to me for $4? How many do you have? Give me 20. I'll take 4. Give me 20 of those at $4. Then you go to the big boy and say, hey, you still need those massive, massive amounts? I have 20. Can you give me $5 a piece? Perfect. I don't need them. You take it. You need them, right? You have use for them. Take it. And I make that dollar difference. And that's what we call profit, your P&L. Because that is what is trading. It is not a difference in price. You know what? When we say, how do you make money? Oh, is if you bought at this price and you sell at that price. But no one tells you why you need to do that. Why do you need to buy at this price and sell at that price? And how do you know to do that now and not later and not tomorrow? How do you know? So we all understand how money is made, but we don't understand the logic of why we're here. When you bring those things to attention, suddenly everything clicks into place. SNRs, they start popping. Support resistance, no matter how you draw them, the logic behind them prevails. Yes? Making sense? We got like approximately 7 more minutes with each other. If you guys have questions, ask me. Feel free to ask me. Otherwise, I'll keep going. Yeah? All right. All right. Hopefully things have been making sense to you guys already so far. Let me see if I can create a new chart here. Let me open up some of the charting. Let me move away from stocks. I'll take it to Forex since we're mainly talking about Forex. Taking the dollar, Euro USD. Now, look at this. Business as usual. Okay, business as usual. And then goes up, comes down, and then starts crashing. Now notice when the crash happens, speed here to here. Notice the next crash. Here to here. Notice the next crash. Here to here. Pop quiz for you guys. Is the speed increasing, decreasing? Is the speed increasing or decreasing? It's decreasing. Okay? Keep that logic in mind. If it's decreasing and you go and put a support and resistance line at that time, let me show it to you here. Okay? If you go ahead and put a support and resistance line right here, and you say, oh, I'm going to sell to this guy who needs it a lot. But his requirement is shrinking and shrinking and shrinking. This is what's labeled as chasing the market. So now suddenly the SNRs that normally were supposed to work, the logic has disappeared. Why should it work? Nobody needs it. Okay? They need less of it. So if you go and open up 40 standard lots, 2,000 standard lots here, good luck. No one needs it. So it's not just about drawing a line there, drawing a line there, drawing a line there. It's also applying the logic that I trained you in the beginning 5-10 minutes. Is who needs your assistance? And does he still need it? Or are we wasting time? Okay? Gone from quiet movement to very aggressive buy. Levels. Real solid levels. Now, whether I draw them like exactly at the top of the line, I'm going to draw it at the body. I'm going to color them in so it looks nice and beautiful. I'm going to put a smiley face next to it. All that's fine. Do it the way you like it. That's okay. Logic needs to be there. If you don't know why you're drawing them, that's the mistake. But you can draw them however your heart pleases, because as you get some kind of a discount, you need to get that trade in to help him. He needs a lot. That's why prices are flying. He needs a lot. He's telling you he needs a lot. Does that make sense? Now, as it goes higher and higher, boom, boom. Does he still need some? Less than before, but he needs some. Can you do a buy from here to there and make that difference? Okay, in this case, it would be going from this price to that price, 40 pips. Or are you interested in holding on to Euro USD as precious and saying, I love the euros? Do we care? We're traders. We're not attached to the product. We come in, we find an opportunity, and we supply it. Right? That's our job. Find the demand, supply it to the demand. And then we get paid for it. That's why we get paid. Not because we drew the line beautifully. That is why we get paid. So if you're trying to help someone who doesn't need your help, you're not going to get paid. You're operating in randomness. So when you trade here, thinking for 2 days there's been nothing, maybe today there will be something. That's operating in randomness. This is milk and eggs stabilized at $1. There's no large player coming in saying, help me. Okay? When there's nobody screaming like that, there's no need for you to go to work and saying, ta-da, I am here to help. Who needs my help? But you don't want to show up randomly and start bothering innocent people on the street saying, hey, you need help? Hey, you need help? They're going to be like, what's wrong with you? Get away from me. I'll call the police. So you can't bother the normal people. You can only help those who need help. Does that make sense? So stop supplying to the market thinking trading is an ATM machine and you go in, you make money all day, every day. It's not like that. It's not like that. Yeah. So it is a profession that has the highest payout. Don't get me wrong, but you need to understand our role. Okay. The word trader has a certain role. All right. All right, guys. So I hope today's webinar was useful for you guys. You know, everything is recorded. FXStreet generally has them recorded. What I really want to get away from this webinar for you guys who are here is, did it make sense? Did everything we talk about make sense to you? Because that's the most important part, right? It is not, hey man, can you give me a winning strategy? I can give you 30 winning strategies in a matter of 5 minutes. Do you know why they work? And do you know when to apply them and not to apply them? This, what I gave you today in today's webinar, suddenly any strategy you apply within that logic frame, it'll work. It'll work. Yeah? So go out, test them out. Please do them on demo. Don't go live. Don't go crazy. Understand your risk parameters. At the end of the day, these are financial markets. You have to be aware of the risks and the disclaimers. Everything we talk about in this webinar is for educational purpose. So try them out on your demo, and then you will see, you will seek me out very, very quickly, and we will be speaking again very soon. I'm sure you won't be able to sleep on this quite easily tonight. So good luck. Thank you everyone for being here. Until next time. Thank you FXStreet for having me. Cheers guys. Bye for now.